Hello, welcome back to another episode of the Tax Advocacy Podcast, your bi-weekly guide to Nigeria's evolving tax landscape. I'm Arabinrin Aderonke, and today we're breaking down the withholding tax, also known as WHT. Withholding tax is a tool used by the Federal Inland Revenue Service to collect tax at source. What is it? Why does it matter? And how can businesses and individuals stay compliant? Let's get started. Withholding tax is a form of advanced tax collection. It's a mechanism through which a payer deducts a portion of payment due to a supplier or service provider and remits it directly to the tax authorities on behalf of the payee. Withholding tax applies to a range of transactions which include professional and consultancy fees, rent for property and equipment, commissions, royalties and dividends, interest payments, construction contracts and supplies. The deducted amount is then credited to the recipient's tax account as part of their annual income or corporate tax liability. The FIRS enforces withholding tax under various provisions of the Companies Income Tax Act, CITA, Personal Income Tax Act, PITA, and Capital Gains Tax Act. The standard rates range between 5% and 10%, depending on the nature of the transaction and the tax residency of the recipient. FIRS requires that all WHT deductions be, number 1, remitted by the 21st day of the following month. 2, be accompanied by relevant schedules detailing payee information and transaction types. Non-compliance can lead to penalties, which is 25% for the first month and 5% for each subsequent month of default. Interest on unpaid amounts. Possible disallowance of the associated expense as a deductible item in your company's tax return. Why it matters? Number 1, revenue assurance. Withholding tax ensures government collects taxes in advance, reducing evasion and improving cash flow for public spending. 2, compliance credit. For the recipient, withholding tax acts like a prepayment. It is credited against their final tax liability, ensuring they don't overpay. Number 3, transparency. Dual reporting mechanism where payer and payee account for the withholding tax, thereby encouraging more honest tax declarations. Number 4, international practice. Withholding tax is not unique to Nigeria. It aligns with global best practices and is especially important in cross-border transactions governed by double taxation agreements, the DTAs. Know the applicable rates and transaction types. You can find a full list on the FIRS website. Deduct withholding tax before paying suppliers. Remit it to FIRS promptly using approved channels like the Tax Pro Max platform. For recipients, always request a withholding tax credit note from the payer or from FIRS. Keep accurate records to claim tax credit when filing annual returns. Reconcile your withholding tax deductions regularly to avoid under or overpayment issues. And special note, FIRS recently enhanced its digital reporting system to flag unremitted withholding tax. So, if you are deducting but not remitting, you will eventually be caught in the compliance net. And that wraps up our episode on withholding tax. It might seem technical, but withholding tax plays a vital role in funding Nigeria's national development. By understanding your obligations, whether you are deducting or receiving, you are helping us build a stronger and fairer tax system in Nigeria. For more resources, visit www.firs.gov.ng or email customercare@firs.gov.ng. You can also use the FIRS self-service platform at taxpromax.firs.gov.ng to manage withholding tax deductions, remittances, and credit note requests. I am Arabinrin Aderonke. Thank you so much for joining us today. See you next time.